Welcome to another episode of TP Talks, PwC's global transfer pricing podcast series, where we discuss key transfer pricing developments from around the world. My name is Christina Novak, and I'm a principal in PwC's U.S. National Tax Services transfer pricing practice. Joining me for today's episode, I have Paul Tang, who's a partner in the PwC Shanghai office, and Eric Mehta, a partner in the PwC Bangalore office. And today we are coming to you from the 2023 Transfer Pricing Global Conference in San Diego, California. I have asked Eric and Paul to join me to discuss the latest transfer pricing developments in China and India. Paul, Eric, thank you so much for joining me today.
And thank you for having us.
Likewise, thank you very much.
Let's start with a general transfer pricing update. Paul and Eric, please tell me about any significant transfer pricing related legislative updates in China and India. Paul, let's start with China.
Thank you, Christina. There has been no significant transfer pricing regulation update by China's STA for the past 2 years. While China has not yet released any legislation for implementation of Pillar 2 or global minimum tax, China's STA shows continuous commitment to further strengthen international taxation collaborations in order to help MNCs avoid or eliminate double taxation. Taking APA as an example, according to the latest China APA annual report in 2021, even though China was seriously hit by COVID-19 pandemic, the Chinese tax authorities signed 9 unilateral APA, including 1 renewal, and 11 bilateral ones, including 3 renewals. The manufacturing industry accounted for the majority of APA signed, highlighting the role of taxation in serving our China real economy. In addition to promoting negotiation and signing of APAs, tax authorities further enhanced the APA process. In July 21, the STA announced simplified procedure for unilateral APA, which provides qualified taxpayers with a channel to obtain tax certainty within 12 months in China. For mutual agreement procedure, MAP, related to transfer pricing, in 2021, the number of MAP cases concluded increased by a significant amount. There were 27 MAP cases concluded, including 17 transfer pricing ones. In 2022, there were only 3 cases concluded. The treaty partners of the closed transfer pricing cases were mainly Korea, we've seen 7 cases, and Japan, 2 cases. However, due to the impact of the COVID-19, the average time to conclusion of an MAP cases increased in 2021. In terms of outcome, more than 65% cases in 2021 reached agreement fully or partially eliminating double taxation. It is anticipated that with everything going back to normal, there will be more frequent competent authority meeting by China's STA in 2023 and the near future. In late October and early November, China STA is holding CA meetings with Japan, Korea, Germany, and Denmark. As a result, we expect more BAPA and MAP cases to be concluded by China's STA.
That's fantastic. Eric, how about India?
So, like China, there hasn't really been a legislative update, but in India, we kind of have a very regular dispute resolution through various courts. So that continues because India being a common law country, a jurisprudence becomes kind of a law in a way, so you kind of have reliance on it. So the way TP works is there is a fair amount of disputes in India from a transfer pricing perspective. Almost, I think 75% of the tax disputes are all about transfer pricing. So the challenge that is there is, at what levels do the transfer pricing kind of disputes go up to, right? So in India, you've got the auditor, then it goes to the first level of appeal, it goes to the tax court, and after that it goes to 2 civil courts, which is the High Court, which is the state, and the Supreme Court, which is the federal court in that sense. The way the law is mandated, it says that only substantial questions of law can travel up to the High Court, which is the state jurisdiction. Now, in transfer pricing, it's a lot more fact-driven than law-driven, I'd like to believe. But what happened is that for one of the high courts, the judge just said, if there is anything to do with transfer pricing, regardless of what the dispute is, it's not a substantial question of law. That, of course, the revenue was losing significantly. So they did appeal to the Supreme Court. And in the last 12 months, we've had the Supreme Court kind of give its judgment, which isn't pronouncing it black and white that whether a transfer pricing case can really travel all the way up to the High Court and Supreme Court. But it does say that, look, not every TP case is a question of fact. There could be substantial questions of law. So it's up to the High Court to evaluate that, because it, again, in High Court, the way it works is there is first an admission stage followed by the actual procedure of appeal. So at the admission stage, the High Courts are duty bound to actually spend time and give cognizance whether there is really a substantial question of law. So that's kind of opened up a can of worms in a way, because most taxpayers thought that past the tax tribunal, you're done. I mean, there should be no dispute, the High Court or the Supreme Court, but unfortunately, that's not how it's panned out. So that's where the alternate dispute resolution, the APAs and the MAPs kind of come back into prominence. Not that they ever lost prominence, but there was a slowdown that happened because of COVID again. The number of cases that were resolved came down. But as per the latest stats, which came out on 30th of March, which gave the data for the Indian fiscal year 22-23, year ended March 23, India signed as many as 95 APAs with
That's a lot.
That's a lot.
taxpayers, 62 being unilaterals and 33 being bilateral. So it's a large number of cases that India has managed to resolve. But India has a big inventory as well. So
How does that compare to prior years?
I'd say this is by far the biggest disposal that we had. As I said, some of it was backlog as well, because the years prior, because of COVID, there were not too many disposals. But what I heard, that they have an ambition to cross the 150 mark come March 24. So
Wow, it's fantastic.
So a lot of focus on APAs, and which, according to me, will be the way to go for most taxpayers.
Mm-hmm. Absolutely. Locking in that certainty. It's a great idea.
Absolutely.
Mm-hmm. Well, thank you both. To switch gears a little bit, what about transfer pricing audits? In a recent TP Talks podcast, we discussed audit trends that we're seeing both in the US and globally. And generally, what we're seeing is there's just been an increase in corporate tax audits, and they're becoming more intense, they're becoming more challenging, the assessments are staggering. Can both of you share what you're seeing in India and China?
Yeah, thank you. Of course. Again, because of COVID-19, China's GDP growth rate was only 3% last year, and probably 5% this year. In order to attract more foreign direct investment, we've seen central government continue promoting business and removing certain industry restrictions for foreign investments. One of the recent examples is China just announced to allow foreign investors to set up wholly owned subsidiaries in China in all kinds of manufacturing sectors. For tax and transfer pricing administration, it has been observed that the overall direction of China's STA is to promote business confidence and protect legal and normal business operation in China. Therefore, we do not expect that China Tax Authority will be over-aggressive in terms of transfer pricing audit in 2023 and probably 24. And on the other hand, we also observe that due to the lower GDP growth rate, economic uncertainties in some industries, for example, the real estate industry may face a hard landing in China. Many local governments in China are under huge fiscal pressure. Therefore, foreign companies should be prepared for more challenges and query by the local tax authorities in context of tax inspection and transfer pricing related self-assessment and adjustment. Not like in a formal transfer pricing investigation, tax auditors are not technically trained for transfer pricing and international taxation administration. Therefore, they may not be experienced about so-called arm's length principle, and they are probably more aggressive views to seek high CIT adjustment amount. According to China's transfer pricing audit rules, any transfer pricing adjustment is only subject to special interest levy, which is based on China's central bank's primary lending rate, roughly 4 to 6% on a yearly basis. However, Any tax adjustment as a result of tax inspection is subject to late payment surcharges, which is 18% on a yearly basis, plus potential penalty. Foreign MNCs could feel quite confused in time for different procedure and implication in the tax inspection versus transfer pricing audit. Also, if taxpayers agree to make self-assessment and self-adjustment on transfer pricing matters, MNCs cannot apply for MAP simply because there are no formal action taken by the tax authorities. As a result, the headquarters tax team should closely monitor and carefully manage the transfer pricing related inspection and self-assessment cases. One thing to add on, comparing to what Eric explained for India, in China, there are not too many court cases to address transfer pricing issue. We've seen most of the cases, disputes are resolved either within tax audit or appeal and probably MAP cases. So really, it's not the practice in China for most of the companies to go to court to resolve tax and transfer pricing issues.
Interesting.
So as I said, litigation in India continues to be the bane, and that's also because the number of audits have continued to increase in India. That's also because there have been many more officers who are part of the team, of the audit team. But what's happened, interestingly, is most of them don't come with a fixed tenure. So they're not really very experienced, just like what we heard from Paul. Mm-hmm. So that doesn't help the cause as well. And that explains the number of adverse audits that kind of happen in India. And because they aren't experienced enough, they could be difficult audits, but they have a job to do, and they do that job. The kind of cases are changing, though. Some officers are actually coming to the revenue service with a technology background, with a management degree, etc. So that's, in a way, also kind of changing or pivoting the way they were doing TP audits. But there are some officers trying to make a difference, of course, in favor of the revenue, in terms of how they're doing audits. So they're picking the right issues in terms of what could be areas of challenge for multinationals. One thing that is picked up is the use of profit splits from an India perspective. That's something, I wouldn't say it's widespread, but it is picking up as a trend for select cases that's coming up. And even where they have, what has happened is in litigation, they've often lost the cases. I think a majority of cases, they haven't really won at the tax tribunal. So they have a lot to gain in terms of doing their audits well. So they are actually spending time on some of the audits, then trying to make their cases, which they would have otherwise lost, a lot more stronger. Even for example, something as simple as choice of comparables, they've become smarter. The way they're choosing comparables is the lowest percentile will still be higher than your typical markup that you expect a taxpayer to be earning. So they kind of seem to have tightened the laces around it and seem to be getting. But again, depending on the industry, the issues are kind of developing as well. But I think we'll see more in the future.
So that definitely matches what we have stated on other podcasts. Paul, I want to ask you about the pilot program that launched in May of 2022 in South China for collaboration between local tax and customs authorities on transfer pricing administration. Can you please provide an update? And were there any issues that came to light after the launch of this program?
Sure. One common transfer pricing issue faced by the MNCs is how to balance the different interests of tax and customs authorities regarding the reasonableness, of course, the intercompany import transactions. So since the establishment of the 3 collection and administration centers by China's General Administration of Customs, GAC, in 2017, we have seen a trend that the customs authorities focusing on the related party transactions for duty assessment and collection. MNCs in the apparel, retail, luxury, liquor and spirit, auto parts sectors have gone through the mass customs inspection and paid extra duties for the past several years. In practice, the customs authorities may use different valuation methods for duty collection. In order to address the concern of the MNCs, the local tax and customs authority in Shenzhen, one of the biggest Chinese cities for technology research and manufacturing, very close to Hong Kong, initiated a joint pilot program in 2022, as you mentioned, regarding collaboration of transfer pricing administration. Under the pilot program, the taxpayer in Shenzhen can apply for unilateral APA with the tax authority and advance ruling with customs at the same time. And both administrations will review and examine the case together in order to help taxpayers resolve differences in administration measures caused by the different legal bases and assessment methodologies for dealing with transfer pricing issues. Once agreed with authorities under the pilot program, the taxpayer will conclude the unilateral APA and customs advance ruling based on the same transfer pricing method for the future years. With the rollout of the pilot program in Shenzhen, we have observed that Chinese customs authorities are also exploring transfer pricing related advance ruling cases in Shanghai, Beijing, and Guangzhou through the aforementioned 3 collection and administration centers. We're helping some clients apply for the pilot program and believe that the new measures will be discussed and developed by both GAC and STA to help taxpayers achieve tax and customs certainty for cross-border related party transactions.
Thank you for that. Before we finish up, I want to shift gears and discuss the geopolitical environment, which, as we know, it's had a huge impact on multinational companies. PwC's CEO survey from earlier this year indicated that companies were focused on supply chain diversification and transformation. What trends are you seeing with respect to supply chain, and what are you hearing from your clients in terms of their outlook for 2024 and beyond? Eric, I'll start with you.
Sure. Everybody in this world is talking about transformation, and we are seeing it no different in India. India continues to kind of lobby to be that alternative manufacturing location, it's China +1. So where that +1 should be, India wants to be there. It's made some progress, but I guess miles to go before we sleep in terms of that direction. But the overall landscape is changing as well. One thing that emerged from the COVID was most countries started becoming conscious of the fact that they need to be more self-dependent. So a lot of manufacturing that is being focused on is also to ensure that not only it serves the interests of the world, but more importantly, it protects the interest of the country. So there's this term coined by the national government called Atmanirbhar Bharat, which means self-reliant India. So that's a big step in that direction, because India was always the services hub for the world. But the pivot that is happening big time is on the entire manufacturing space, where we are seeing a lot more happening. And I think the way the whole landscape is transforming, it goes beyond tax and transfer pricing. The whole business, the way they are being conducted, there is so much more focus on the ESG aspects. The sustainability is a big deal. And honestly, if you would have asked me this question pre-COVID, whether the large corporates, for example, in India, are they really that focused on sustainability, governance, environment, I would have said mixed bag. But now you're seeing a lot more push towards that. So that's changing the way the businesses are getting organized. There is more consciousness in terms of how business is being done. And as a result, any change in business, TP plays a role, right? So
Absolutely.
We continue to be relevant as far as any of these changes are taking place. And I think we are poised at a very different stage in terms of the growth trajectory that, and if you'd seen the world economy reports, etc., while generally the economic outlook across the world seems to be a bit gloomy currently, and possibly 2024 Q1 will potentially decide which way it would go. India continues to be one of the brighter spots in terms of growth, with a potential 5.5-6% plus growth expected in an economy as large as what it is. So, and as I said, it's a mixed bag of multinationals continuing to kind of look at India as an alternate destination, but also large Indian multinationals kind of pivoting and trying to be a lot more global. Possibly the valuations are getting better to maybe pick up a few companies in the West as well. But In general, I'd say that we are seeing the whole business arena transform itself from an India perspective. And I'd see exciting times ahead.
Sounds like it. Paul, how about you?
I think from a China lens, we're also seeing a trend that certain MNCs are in the process of shifting the supply or manufacturing capabilities out of China to Southeast Asia, Mexico, or even back to home countries. On the other hand, China MNCs are also exploring investment opportunities in the overseas markets, including India. For supply chain transformation, I think that it's a journey from strategy to design and from design to implementation. So what does that mean? MNCs should have a very clear strategy, an agile and sustainable method design, and strong execution capabilities. Some detailed work related to tasks include exit strategy study and footprint design, location study, including government subsidy negotiation, customs compliance analysis, including export control, EAC, asset and people deployment and reallocation, of course, transfer pricing analysis. And MNCs should prepare for potential challenges from the tax authorities of both home country and market jurisdictions. MNCs' finance and tax teams should also work closely with C-suite management, business people, and supply chain team to add value through the whole process. A good tax planning will amplify the profits arising from supply chain transformation and save the company timing and resources when dealing with tax disputes in the future.
If I may just add one more thing on the governance side, I think, again, us as transfer pricing professionals are poised to play a very active role in that. And increasingly, as we're talking about the entire intercorporate framework that is there, regardless of whether transfer pricing applies or no, we can actually use our knowledge and principles. And we are actually beginning to see work happening in that space where we use our TP knowledge, the methodology that we follow, but it is actually not TP legislation driven, but it's more in the area of governance. So I just wanted to add that bit, that's another thing that we are seeing where we continue to play an active role as the paradigm is shifting.
That's a good point.
Yeah, that's helpful. Well, Eric, Paul, thank you for joining me today and taking the time to update me and our listeners on the latest developments in China and India. I also want to thank our listeners for tuning in. We'll be back next month with our next episode of TP Talks. Until then, have a great day.
This podcast is brought to you by PwC, all rights reserved. PwC refers to the U.S. member firm or one of its subsidiaries or affiliates and may sometimes refer to the PwC network. Each member firm is a separate legal entity. Please see www.pwc.com/structure for further details. This podcast is for general information purposes only and should not be used as a substitute for consultation with professional advisors.